This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on July 30th, a Thursday, 2015, heading into the long weekend in Canada. And everyone excited about Big Valley Jamboree and Heritage Days, all the different events on the long weekend. Our time is 8:42 Mountain. A radio show runs on 6:30 CHED in Edmonton, Sunday afternoons at 3. If you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. To connect with Harold about investing in hard assets, go to the website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Speak personally and privately with Harold at 1-800-432-1022. A lot of people have been phoning Harold here in the last little while, very confused about the financial markets and exactly what they should be doing. And Harold will be happy to speak with you. And remember, everything is confidential. Our featured diamond of the week from rarecoloreddiamonds.com is a 1.56 carat cushion cut, fancy, vivid, yellow cushion, internally flawless inscribed. It is absolutely beautiful. A gorgeous, gorgeous diamond. Check it out at rarecoloreddiamonds.com, featured diamond of the week. And as we talk about the news of the week, the Chinese stock market, more gyrations. In fact, at one point during the week, at the beginning of the week, it was down 9%. It's popped up a little bit, but it's been up and down all week. The Chinese trying to keep the stock market afloat, but having trouble doing so. In the United States, the U.S. debt ceiling needs to be raised late October. So Congress will be having a fight in the United States over raising the debt ceiling. They're currently at roughly $18 trillion. And some people think that they're actually in debt to a tune of $200 trillion, depending on how you do the math and accounting. The IMF warns of a gloomy Eurozone outlook based on Greece and other countries. Also, Puerto Rico. We know that they're asking to go bankrupt, and the bondholders are saying, no, we're not going to take a haircut. Very similar to what happened in Greece. Also, OPEC. We know that they're playing a part in keeping the oil price down. It's costing them $200 billion a year to keep oil prices where they are, so they can choke off shale and other, obviously, oil producers around the world that are more in the higher cost area. And also gold this week. We saw gold continue to move down. Has it had its magazine indicator moment? We have an interesting story in our free weekly newsletter. You can get our newsletter from Harold at rarecoloreddiamonds.com. and connect with him at 1-800-432-1022. We'll be happy to send it out to you free of charge every week. It's the companion to our radio show. But a lot of negativity this week towards gold. And if that is any indicator, at some point in the near future, and we don't know when, Harold, it could be a bottom, because usually when you start seeing all the magazines with front page stories on an investment, it usually means it's very, very close, a very close time to buy, because they usually get it wrong. They don't get it right.
Well, that's very true. But in this particular point, and we've been saying that gold is going to be dropping for several months now. So what we've seen, the market's down 650 today as we're taping the show. In the last 30 days, gold has been down 82.40. And within the last year, gold has been down $204.30, down 15.78%. So the reason that gold is going down is primarily because of the relationship with the U.S. dollar. And that's where gold has always traded, is in respect to the U.S. dollar. When we first started getting in gold back in 1999-2000, gold was only at $250, and that's primarily because the U.S. dollar was the strongest currency or one of the strongest currencies during the 90s. So when the U.S. dollar topped out at about 108, 109 in that area, and by the way, right now the U.S. dollar is trading at 97 cents. But when it topped out in the 90s, back at that particular point, nobody was even talking about gold. Why would you even consider gold as a strong investment when the U.S. dollar, the U.S. stock market, and the U.S. economy was in excellent shape? But that started to change. Once we started recommending gold in 1999 for the reasons that were relevant at that particular point, we started to see the opposite. The U.S. dollar started to fall. A lot of it was have to do with the debts and everything that occurred because of 9/11 and all that. But as the U.S. dollar started coming down, gold started to rise. Gold went from 250 to 300, and once it started breaking 300, it started getting people's attention, but they still didn't believe that gold was a viable investment at that point. The U.S. dollar kept on dropping and dropping, and gold kept going higher and higher, till it met in 2011. At 2011, the U.S. dollar was at one of the lowest points it's ever been. It went from all the way at 108, 109 back in 1990s. It fell all the way to 72.5 cents. That was a massive drop for the U.S. dollar, and consequently what happened to the price of gold is it skyrocketed. Gold went from $250 to $1,900. It almost went to the 2000 level that a lot of us were talking about, but it did hit 1920. And then things started to happen. You know, again, I've given the reasons why gold started to fall in 2011. It was primarily because in the commodity laws, for every futures contract and for every exchange-traded fund, ETF as they're known, there has to be the equivalent amount of gold in the warehouses in New York physically, just in case somebody wants to take delivery of their contracts. So basically, at that particular point, gold was such a popular investment, and again, it was already at 1,900. People predicting $3,000, $4,000, $5,000 gold. What they did at the exchanges where gold is traded in New York and in Chicago is they raised the cost of doing business, the margin requirements as they call it, and they raised the margin requirements 5 days in a row, and it made gold so expensive to trade in silver that the markets plummeted. This was predetermined. This was done purposely. Otherwise, there was no reason for gold to fall. Nothing happened at that particular point that turned gold from bullish to bearish, except the fact that they were in violation of the commodity laws, and that's the way they actually decided to take to deal with it. And that's exactly what they did. And they brought the price of gold down to where it is right now, to where we're trading gold at $1,081. So here's what's going to happen, and it's extremely important that you understand this. Again, I'm giving you information, that you need to make an intelligent decision. This is not emotional. Yes, we all want gold. I own gold. I own a lot of gold. I own several thousand ounces of gold physically, and I own a lot of silver. And the fact is that I don't trade it back and forth because that's not what you hold it for. There's going to be massive problems moving forward. It's happening right now. But the fact is that gold is still going to drop. Gold is going to drop to at least $1,000, and that's going to happen fairly quickly. You're going to see it really start to escalate, and here's the reason for it. Okay, everything is tied into the U.S. dollar. Now, the U.S. economy, I'm a Canadian living in the United States, so it's not that the U.S. economy is great, but it's the best game in town because China is now plummeting. China has got all these ghost cities. China's made numerous massive errors, and now their market has plummeted. They have a stock market that is so heavily manipulated, and what they were doing is they were buying stocks and moving the market ridiculously higher than any valuation could actually warrant. So what they also did is because the market was going up and people were starting to notice, and everyday citizens that shouldn't be trading this market, now have the opportunity to trade it. The government now made it possible. Don't forget, it's a communist country. So they now made it possible for the everyday citizens to invest in the stock market, and because the government was promoting it, it seemed like it was a sure thing. So people not only took their money and put it into a market that they don't really know that much about, but on top of that, they were allowed to leverage it. And they leveraged it very heavily. Some leveraged it 10, 20, 30 to 1. That means that if a stock is going for $100, you may only have to put up $10 in order to control that stock. And so you're controlling $100 worth of stock for only $10. Well, that's great when the market's going up and going your way. But when the market starts going against you and you start having margin calls, that's when you realize that you're in big trouble. You've now lost so much money, and you don't have that money anymore. And then they start liquidating whatever they have that has any type of value. So what has happened when the stock market hit its peak a couple months ago, and then all of a sudden the traders started getting smart, the institutional buyers, the ones that make the markets, and they started to drop the market. And the market started to fall and fall substantially. And as it was falling, people were selling out, and it was escalating and escalating to a point to where the market dropped 30% in 1 month, in 2 weeks. 30%. Well, 30% is bad enough. But when you're leveraged 10 to 1, you've just lost all of your money, everything. And now you have to scramble to sell whatever you can. So what does the Chinese government do while the market drops 30% in 2 weeks? They halt trading. They don't let the big traders sell out of their position. Well, now panic is starting to set in. And again, when you all of a sudden see a market falling, you've got margin calls, and you're being called for money, but you can't sell out of your position. It's an unbelievable thing. And then all of a sudden, the Chinese government came in with billions and billions and billions of dollars and started buying back the market. And the market started to rise. In fact, it had its largest one-day increase just because of that. But just think about that. That's not a market that's based on any type of technicals or fundamentals. It's a manipulated market that was plummeting. They stopped trading, and then the government came in and bought stocks back. That's out-and-out ridiculous and manipulation, and anybody who would have stayed in the market after that happened, I think, is foolish. So what happened? The market went up for a couple of days, and then it started to fall again, and it fell 9% in 1 day. I think that happened on Monday. And again, you've got now China, probably the second biggest economy in the world, is now frazzled. It's in huge trouble. People are losing money left and right. Not only that, gold prices are down, and most Chinese people own gold. It's a real catch-22. So now you've got the second largest economy in the world that's dying. They're losing a fortune, losing, again, in the stock market, in every aspect of their business, in real estate and all that. Look what's happening in Europe. It started with Greece. Now see what's happening in Italy. They've got unemployment that defies description. Nobody can get a job there. The same thing's happening in Portugal and Spain, and it's like a domino effect that will happen all over the world. So the fact is that while this is happening in Europe and China, and don't forget Russia's got sanctions against them, they're in terrible trouble. They've got inflation, that you couldn't believe, and so does Venezuela. So you've got all these massive situations going on, and then you got the United States. Stock market sitting just under record highs. Employment, at least the way the government portrays it, is doing okay. And the fact is that no matter how bad things look in the United States at this particular point, it looks way better than China and Europe and almost every place else in the world. So here's the recommendation. The U.S. dollar is going to continue to strengthen. As the money continues to come out of China and everything, the smart money is going into U.S. dollars. And it has been for quite a long time. And my clients are in that. My clients are in diamonds. Diamonds are priced in U.S. dollars. And that's extremely important because my Canadian clients that 2-3 years ago bought diamonds when the Canadian dollar was at par with the U.S. dollar is up 30% on the currency just because the U.S. dollar is 30% higher than the Canadian dollar. And with oil prices going lower, the Canadian dollar is going to continue to fall. I anticipate that the price of oil will drop down to $30, $35 over the short term, and that will push the Canadian dollar down to about 60 cents versus the U.S. dollar. So my strongest recommendation is to continue to keep assets in U.S. dollars because it's the best game in town right now. The Canadian dollar will continue to fall because of low oil prices, and as Randy brought up at the beginning of the show, the Saudis can keep oil prices as low as they want. They got all the money in the world. What they're doing at this point here is they're controlling the oil market, and they're going to try to squeeze out the U.S. and Canada and everybody else that is producing higher-priced oil. If oil is being produced at $80 a barrel and is selling for $40 in the open market, how much oil would you produce? So to all my clients out there that have been calling, I must have had 40 phone calls last week, and I took every single one of them. My strongest recommendation is to have some money in American dollars at this particular point. You know, many of our clients invested in our private investment, and that was all based in U.S. dollars. Just think how smart these clients were that invested when the Canadian dollar was still fairly strong a couple years ago. They put it into our private investment, which deals in rough diamonds, and our clients were getting 24% a year over the last 2 years, and that was all in American money. They ended up making another 30% when they convert back to Canadian. And if they hold off till the Canadian dollar is down another 15%, which is going to happen, they pick up a fortune again. So again, if you're not making money in these markets, and I'm sure a lot of you out there are not, you got to contact me. Again, I've traded these markets for 35 years. I've made recommendations every day of my life. Okay, I'm not afraid to put my reputation on the line all the time. And I've had huge winners. I've had my share of losers over the years. I've been in business 35 years. You can't be right all the time. But I called gold from $250 to $1,900. People made fortunes with me. In actual fact, I'm very conservative, as most people know. I don't leverage. But a lot of my listeners do. And they take my advice, and they trade the futures market. Do you realize that within the last month, if you bought one futures contract in gold, which you would have had to put up about $2,500 goodwill deposit, you get that money back when you sell out of your position, but every contract is 100 ounces of gold, you would have made $8,200 this month on every contract of gold that you would have owned. If you had the wherewithal to trade futures or options and knew how to do it. Many of my clients do, and they call me for advice, and I tell them what to do. $8,200 this month on a market that everybody else thought was going up, except for me, that said that the market's going down. Again, it may not be a popular choice at this point, but wouldn't you rather have accurate information so you can take that information and use it to your strongest advantage? I know what's happening in the markets right now. We're going to see a massive increase in the price of the U.S. dollar. It's going to break par very soon. It's almost at 98 cents now, and it's going to go to 107 to 109, lifetime highs, just like we saw back in the 90s. And history always repeats itself. I've got a lot of confidence in my recommendations, and I've got experience dealing with these type of moves. I've called them long before they've happened. So if you're not making money in the markets right now, you got to call me. And number two, if you're not in U.S. investments right now, and I don't mean stocks, I mean U.S.-based currency investments, I can help you with that. Give me a call. Let me go over with you your personal situation, because if you don't know what you're doing, just like the Chinese, you could lose all of your money. And I'm saying do not go into the U.S. stock market. It's one of the most dangerous things. There's other ways you can invest to make a lot of money in U.S. dollars, and my clients are doing that with me right now.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Speak with him personally, privately, 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1.56 carat cushion cut, fancy, vivid, yellow, internally flawless inscribed diamond. It is gorgeous. See it online. See the video of it at rarecoloreddiamonds.com. Featured diamond of the week. One of the stories we did not touch on off the top, the Fed met, and they actually left U.S. interest rates where they were. And people are speculating, when will the United States raise interest rates? Of course, here in Canada, we're speculating, will they lower interest rates? We were at 1%, then to 0.75, and now at a half. And they're thinking maybe we may go down to a quarter, if you can believe it, here in Canada. Obviously, if that happens, the Canadian dollar will continue to weaken. If the United States in September raises rates, and here in Canada, we will be affected with our dollar taking a hit. There's no doubt about that. And if you have any questions whatsoever about the financial markets, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. One of the stories that is in our free weekly newsletter, Tom DeMark warns Chinese stocks are following the same path of the Dow in 1929. Chinese stocks will decline about 14% over the next 3 weeks as the market demonstrates a trading pattern that mirrors the U.S. crash in 1929. And DeMark, who predicted the bottom of the Shanghai Composite Index in 2003, has a very good track record. And they go on to say that the index moves since March are tracking those of the Dow Jones Industrial Average in 1929, when the gauge lost as much as 48%. A hedge fund investor by the name of Ray Dalio was a big supporter of the Chinese stock market, and he came out this week and he said there are no safe places to invest in China. He is out of the Chinese market. One of the stories that I thought was quite interesting, and we have about 3 minutes left in our segment here, Harold, gold producers and their stocks have just gotten decimated. Lawrence Williams wrote a very interesting article about gold majors. The latest gold price declines are putting even the majors close to loss-making territory, and the industry's long-term future could be seriously damaged. Let's face it, in the light of the latest gold price falls, the gold mining sector now desperately needs something that it can set it back on the positive track. Gold stocks are sitting at a multi-year low, and for even the gold mining majors, their 2015 cost predictions are now getting perilously close to the levels where gold currently is trading. To give you an idea, Barrick Gold, their forecast for them to basically make any money, what it costs them to get the metal out of the mine is anywhere from $860 to $895. Newmont Mining, $950 to $1,020. Anglo Gold, $1,000 to $1,050. Goldcorp, $875 to $950. And Kinross Gold, $1,000 to $1,100. And the truth of the matter is, Harold, and we have about a minute and a half left here, when you hear those numbers, if gold does get down to that 1,000 level, or even some are predicting 900, 800, 750, these companies are in serious, serious trouble because they will not be able to make a profit on any gold that they are currently pulling out of the mines.
Better believe it. Again, and don't forget there's other costs on top of that. There's refining the gold and everything too. So, again, this is a good situation, believe it or not, because once gold gets below production cost levels and silver's already below there, again, they're going to stop producing. And then there's going to be a shortage. And that's when the market is going to start to take off on shortages of gold and silver again. And I think that that's going to be coming within a period of time. And it's a lot shorter time than most people think. But the market has to run its toll. I think it is going to find heavy support at 1,000, and then we'll reanalyze at that particular point and let you know what's going to happen. Most important thing right now is to listen to what we said today. You've got to get some money into American-denominated investments. It's where the major amount of money is going to be made for the intermediate term, at least. It's extremely important.
RareColoredDiamonds.com. That's Harold's website. Our featured diamond of the week, a 1.56 carat, cushion cut, fancy, vivid, yellow, internally flawless. It's inscribed. And we'll talk more about that after the break. We also had an engagement this week, beautiful ring given out, and there was a yellow heart diamond, a yellow diamond that was given out to a very world-famous singer that everyone will know. And we'll talk about that shortly. But connect with Harold at RareColoredDiamonds.com or call 1-800-432-1022. 1-800-432-1022. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July 30th, a Thursday, 2015. Our time is 9:06 Mountain. We're heading into the long weekend. Hopefully everyone has an outstanding long weekend here in Canada. Connect with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com. Telephone number 1-800-432-1022. 1-800-432-1022. During the week, we had some diamond news, and there was an interesting quote that I found from Mae West. I never worry about diets. The only carats that interest me are the number you get in a diamond. So Mae West, along with obviously other female celebrities, They love their diamonds, and one of them was Mariah Carey. Mariah Carey, and we have a picture of this in our free weekly newsletter, shows off an 18-karat yellow heart-shaped diamond necklace worth $500,000 from billionaire boyfriend James Packer, part of the Packer family from down under, and they're all wealthy folks. It's hard to impress your lady when she's pretty well off, but James Packer managed to do it when he dropped $500,000 on a yellow heart-shaped diamond necklace for Mariah Carey. And she's been performing at Caesar's Palace, the Coliseum in Vegas. In fact, she even sent a song out to him and thanked him for this stunning, and you can see the picture in our free weekly newsletter, this stunning yellow diamond, heart-shaped diamond necklace. Absolutely beautiful. And for those that watch the Bachelor or Bachelorette, we congratulate Canadian Bachelorette Caitlin Bristow, originally from the northern Alberta area and now makes her home in Vancouver. On Monday's show, she was engaged to Sean Booth, and we have a picture of her engagement ring. She got a 3.5-carat stunner. In fact, they say that it was one of the most expensive diamonds given out on The Bachelor or Bachelorette, and it was from Neil Lane. But an absolutely gorgeous, stunning diamond given to Caitlin Bristow, who is engaged to Sean Booth. Congratulations to both of them. They're talking about weddings and babies and all sorts of stuff. But, Harold, we love to hear stories about people receiving diamonds as gift. Mariah Carey getting a diamond. We have Caitlin Bristow, and in fact, we talked on the last show about Iggy Azalea and Nicki Minaj both getting yellow diamonds as engagement rings. That seems to be the trend. Yellow seems to be the hot color right now.
Oh, it is, and they're going up like crazy, as we know, because of what we see at auctions. And the bigger ones, like the Mariah's diamond, that diamond will do nothing but go up in value. My wife has a 14-karat yellow flawless, a canary diamond that's tripled in price in the last 6 years. So, again, diamonds are phenomenal investments if you buy the right ones. Not all diamonds are investment quality. In fact, most are not. But to give you an example, you do not have to be Mariah Carey in order to have an investment quality diamond. And believe me, the diamond that she has is truly an investment diamond on top of being beautiful. But, for example, most of my clients are not in the class of Mariah Carey. Most of my clients are just hardworking, everyday people that just want to do well. You know, you put your money in the stock market like the Chinese, you lose all your money. You go into other investments, they work for you or they don't. You know, the fact is most investments are not working right now because of the volatility and all the risk in the world today. However, something as simple as a yellow flawless diamond, a 1-carat yellow flawless diamond, is a phenomenal investment. They increase by about 15% a year. So you look at back in 1980, you could have bought a 1-carat yellow flawless diamond for about $500 a carat. Today they're about $20,000. Is that not a great investment? They've never gone down in value. There's very few of them. A lot of my clients don't need the money. A lot of my clients buy diamonds and intend to give them to their kids and grandkids because that's when these diamonds take on a life of their own. And then you really see how smart you are because you see how much these diamonds can be worth, 20, 30, 40, 50 years down the road. I've mentioned on many shows, a diamond that my wife's girlfriend inherited from her grandmother. Her grandmother bought it 50 years ago. It was a 5-carat pink for $50,000, which at that point was a lot of money, and today that diamond is $5 million. I could give you hundreds and hundreds of examples of that same type of return that are happening in the diamond market. So, for $20,000, you could buy a yellow flawless diamond from us. You could put it away in your safety deposit box, put it into a ring or necklace, enjoy it, whatever you want to do, and then give it back to us. Because we can sell that diamond for you down the road on our auction business. We own 8 Seagull Fine Auctions, the only company of its kind. And we only make money when our clients make money because we get 10% of the profit and our clients get everything else. So the other great thing about investing in diamonds, number one, they increase in value substantially. Number two, certain diamonds never decline in value because there's so few of them, and they're priced in U.S. dollars. And that's extremely important because being priced in U.S. dollars right now gave my Canadian clients a gigantic return. Again, clients that 2 years ago bought when the Canadian and American dollar were pretty well at par have picked up 30% just because the American dollar increased by 30% over the Canadian. Just think about that. You made 30% on your money without even doing a single thing about it, and that doesn't include how much the diamond has gone up in value. If you held the diamond for 5 years, it's not only gone up to 30% on the currency, but it's also increased by 15% a year. So, yellow flawless diamonds, they've got to be flawless, and there's Indian diamonds. You've got to be very careful about this. There's firms out there that sell cheap diamonds, and they may have some yellow flawless diamonds from India that are very brittle, and even though the GIA will actually grade them as internally flawless, which I'm sure they are, the fact is that they're not the quality of a South African diamond. A South African diamond is extremely hard. It's got fire to it. When you cut it with the right amount of facets, just look at the featured diamond this week. Go on rarecoloreddiamonds.com, pull up the featured diamond, look at the video, and you'll know exactly what I'm talking about. Our diamonds are spectacular, the best that you can possibly get. We have diamonds that start at 20,000. We have diamonds that go to 40 to 50 million. Most of my clients deal in diamonds under 100,000. Again, to put them away, it's not like a stock. You own it. It's portable private wealth. If the good people of Greece had diamonds and the banks were closed for 2 or 3 weeks and they couldn't get their money and all the problems that they're having, all they would have to do is take their diamond and go to Germany, go to England, go to Switzerland, go to wherever, right across the border, and sell it for instant cash. And that's what diamonds can do. They're portable private wealth, and I couldn't give you a better example of that than what the people in Greece are going through right now. But on top of that, look what the people of China are going through. They're losing all their money in stocks. Now they're losing their money in gold, which are both things that the government told them to do. But the fact is that we have several Chinese clients, especially lately, that are buying very expensive diamonds because they're safe. They don't go down. They're not traded on exchanges like commodities and stocks are. So you don't get all these massive buyers and sellers in the market. We have the resale market for it. We invented that. So basically, it's a very conservative investment. When you've got money in a diamond and you own it in your safety deposit box or on you, you know you've got wealth that if, God forbid, something happened, you could travel. You could take that diamond with you. You own it outright, and you could sell it, and you could have money to get back into business or buy food or do whatever. I mean, listen, we listen to all the horror stories. I have my own opinions on the market. I believe I'm right on the markets, but so does everybody else that writes their own reports and has their own opinions. I've had my own radio show for over 15 years. I've been on CNN and CNBC, Fox News and Bloomberg and major other stations. I know my business. And basically, I'm bringing to you a very conservative investment that could not only save your financial life, but could make you a fortune of money down the road. The next diamond I'm going to talk about is a home run. It's a diamond that I believe that all of my clients that own Argyle pink diamonds are going to make a fortune, and that's going to happen over the next 5 to 7 years. So it's not a long period of time. Most people that buy stocks or mutual funds and put them away for retirement put them away for 30, 40 years. I'm talking about 7 years. The Argyle mine in Western Australia is one of the most famous diamond mines in the world. They produce pink diamonds. 95% of all the pink diamonds in the world come from the Argyle mine, and the mine is getting ready to close. It's been in existence since 1986. It's just not producing anymore. They're holding on as long as they possibly can, but it's not producing anymore. Very few diamonds are coming out of the mine of investment quality. So we've invested in this very, very heavily for our clients. You could own an Argyle pink diamond now, starting at about $40,000, $50,000 in that range. So it's not for everybody. Not everybody has that money. But the bottom line is, the closer we get to the mine closing down, these diamonds are skyrocketing in price. Again, this mine produces 95% of the pink diamonds in the world, which is only a very small amount of diamonds. This year at the Argyle tender, there was less than 50 carats. Can you imagine, from the entire Argyle tender, under 50 carats of diamonds? So basically, these are the most concentrated form of wealth on earth. They are worth fortunes. And the prices are going through the roof because you're not going to be able to get them anymore. 95% come from this mine. We anticipate that our clients that own the highest saturated colors, the vivid pink argyles, could make 1,000% on their money in the next 10 years. I believe that is going to happen. It's happened with blue diamonds before. It's starting to happen with yellow diamonds, especially the very large ones, and it's definitely happening with pinks. This is an opportunity to get money out of very risky stock markets, mutual funds, those type of things. Believe me, markets you're not going to make any money on. These markets are getting ready to plummet again. And when they plummet, you're not going to make your money back. These next falls that are coming, similar to China and the European markets, are going to devastate investors. And don't forget, we just came off of that in 2008 and 9, where the market went from 14,000 to 6,500. So unless you've got a propensity for pain in the investment business, get out of the stock market. You're not going to make any money in it. Put some money into a rare colored diamond, something that's going to make you a lot of money and preserve your capital for you. The first thing is capital preservation. The next thing is capital appreciation. You've got to be able to keep your money, not like the people in China that are losing everything. You're losing in stocks, now you're losing in gold. You know, the thing is about the unfortunate thing with the Chinese people, they never saw this coming. The government told them to do it, said it was safe and they're going to make money. And all of a sudden they lose everything. And then when I say they're losing in gold, they now have to sell their gold to raise money to pay their margin requirements on their stocks that they're losing on. So again, it's a vicious cycle. I don't want to see the listeners to our show and our clients getting caught up in this. This is the most dangerous time, and the advice I'm giving you is excellent. Get out of the risky markets, get money into U.S.-based investments. Diamonds are priced in U.S. dollars, and any of my Canadian clients now know what I'm talking about. On our private diamond sales, they picked up 30% in the last 2 years just on the currency alone. On top of that, the price of the diamonds are going up in value. And our private investment that deals in rough diamonds returned 24% 2 years in a row to our clients. That's in U.S. dollars. Our clients are making fortunes while most people in the world right now are having massive issues. The volatility, the fear of losing all your money when the job market is tight. Now, the next thing that's coming up, you know, they're talking about in the United States of raising interest rates. You know, they think that it's a safe time to raise interest rates. I'm saying that that's a disaster waiting to happen. You raise interest rates at a time when they're trying to get the U.S. economy back on track. You know, you raise interest rates, real estate prices start to come down because people can no longer afford their mortgages as easily. Number two, the stock market. You start raising interest rates. The reason the stock market's almost at 18,000, the Dow in the U.S., is because of cheap money. Once money starts getting more expensive again, all of a sudden that benefit is gone. So you're talking again about opportunities in a marketplace. And basically there's times to get aggressive and there's times to be conservative. Now is the time to be conservative. Now is the time you don't want to be like the unfortunate situation in China where you wake up and find out that your stocks are down 30% and you're now out of money again. Get into the type of investments that are going to give you the returns. Many of my clients are retired, and they're in this private investment making 24% a year. Means on $100,000 invested, they're making $24,000 a year return in U.S. dollars. $48,000, almost 50% return in 2 years. Those that take the program over 4 years are doubling their money in 4 years and getting U.S. dollars back, which are worth right now 30% more than Canadian dollars, and soon is going to be worth 40% more than Canadian dollars. So if you don't know how to get into this, call me. I'll spend as much time. I don't care if you're a tiny investor or if you're Warren Buffett. You're important to me. If you've listened to my radio show and you need our help, I'll spend as much time over the phone with you as you possibly need. We've got great things coming up for the fall. We've got amazing seminars coming up. We're going to bring to you the opportunity to buy physical gold when the time is right at spot prices. Nobody can do that for you. No commissions, spot price. Even Kitco charges $23 over spot for gold. We won't charge you anything except the spot price in gold. So get in touch with me because now is the most vital time. And if you're not making money in the markets, our other clients are. If you want to learn how they're doing it, give me a call. I'll spend as much time with you as you need, and we'll get you back on the right track. Diamonds are doing amazing. Diamonds will continue to do amazing, and we're very, very excited about what's happening in yellow flawlesses, what's happening with Argyle. We'll never get a chance to do this again. Once the Argyle mine closes, there is not another mine in existence that will do this. So if you're sitting back to see how this one situation works out, you're going to miss out on one of the biggest paychecks that you've ever gotten in your lifetime. My clients in pink diamonds will make anywhere from 300 to 1,000% return on their money in American dollars. So again, if you're not making that kind of money, give me a call and let me show you how we can do that.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. And remember, everything is 100% confidential, private. What you discuss with Harold, it's between the two of you. Goes no further. 1-800-432-1022, rarecoloreddiamonds.com. And we've touched on it on past shows. The 2015 Argyle tender is currently underway. It was launched at the Sydney Opera House. And the 2015 tender is known as the Connoisseur's Collection, made up of 65 diamonds, weighing a total of 44.14 carats. This is for the entire planet. The rarest of the rare, museum-quality diamonds, including 4 fancy red diamonds, which can attract bids of more than $1 million per carat. And the collection includes 5 hero diamonds, which have been individually named based on Argyle's partnership with the Australian Ballet. They are the Prima, Aurora, Allegro, Spectra, and Aleve. So the tender is underway, and we should have more information later on in the fall, probably September, October. We'll have a better idea of how the Argyle tender did. Now, when it comes to our featured diamond of the week, it is a yellow diamond, and those are red hot, as we were mentioning. It is a 1.56 carat cushion-cut, fancy, vivid, yellow, internally flawless, inscribed. Now, Harold, what I wanted you to do is please explain to us what it means when we're talking about inscribed.
Okay. When a diamond is a very rare and special diamond, the cutter of that diamond, when they take it to the Gemological Institute of America in New York, GIA as they're known, you never ever buy a diamond that doesn't have a GIA grading report. So when they grade this diamond, they grade it on the 4 C's. They grade it on the color, on the carat weight, on everything that is important to that diamond. In the case of this particular diamond, our featured diamond, which is magnificent, it's a vivid yellow flawless, meaning that vivid yellow is the highest saturation of color. The way that GIA grades a yellow diamond, for example, is faint and very light, and we never deal in those. Those are not investment quality diamonds. But when you get into fancy yellow, those are known as canary diamonds. Fancy intense yellow, they have more intensity, so they're more expensive than a fancy yellow. And then comes the fancy vivid, which has got the highest saturation of all, and it's the most expensive of all diamonds. So this diamond is over 1.5 carats, which is a huge size, so the carat weight is huge. The color is the best you can possibly get. You've got the cushion cut, which is one of the most popular cuts of all. So you've got a perfect diamond, and the clarity, so that's the 4 C's, is internally flawless. So this is literally a perfect diamond. Color-wise, a 10 out of 10. So the fact is, it's the right size, it's over 1.5 carats, it's a fantastic cut, a cushion cut, one of the most popular that there is. On top of it, it's the best color you can get, fancy, vivid yellow, and it's the best clarity you can get, which is internally flawless. So what we did when we cut that diamond, and we cut that diamond ourselves, we mined it and cut it. We took it to GIA as a perfect diamond, and we had it laser inscribed on the girdle for identification purposes, which shows up on the GIA report. It's a very special diamond. The color on it is one of the best I've ever seen. And again, we had it laser inscribed for identification purposes because it's a perfect diamond. It's magnificent. All you have to do is look at the video of it, and you'll know exactly what I'm talking about. That diamond over the next 10 years will do better than any stock, commodity, any investment that you will make. Just put that diamond away in the safety deposit box, hold on to it for 10 or 20 years, whatever, and give it back to me to sell, and we'll sell it on our auction business, and we will only take 10% of the profit. So The only way that we make money is when our clients make money. Randy, it's an amazing diamond, and if you look at the video on it, that speaks for itself. A picture is worth, 1,000 words, and then a perfect example of it. It's a perfect diamond.
1.56 carat, cushion cut, fancy, vivid, yellow, internally flawless, inscribed diamond. Now you know what inscribed means. And if anyone ever asks you about it, you'll be able to explain it to them. RareColoredDiamonds.com. You can see the video of the diamond as well. You can see a picture of the diamond in our free weekly newsletter. Speak with Harold about investing in this museum-quality rare diamond. RareColoredDiamonds.com. 1-800-432-1022. 1-800-432-1022. In the world that we have today, not only financially but geopolitically, you look at what's happening around the world with the drought situation. I know here in northern Alberta we've got serious drought. We've had a little bit of rain of late. In California, they're talking about cities being wiped off the map because water is running out. And a lot of our produce for North America comes out of California. Another interesting story, too, Earth would only have 12 hours to prepare for a massive solar storm. And that's one of the stories that you can find in our free weekly newsletter. One of the stories that we had a few weeks ago was about the possibility of an earthquake on the San Andreas Fault. And that would affect, they really believe it could be happening at any moment. That would be affecting Seattle, Vancouver, the Pacific Northwest. And there are different experts in seismology that believe that we are due for some activity in the world, in particular in California, into the Pacific Northwest when it comes to seismic events. So something to keep in mind. And if you'd like to get our free weekly newsletter, yes, we primarily focus on diamonds, gold, and silver, but we do have other stories like that are of interest when it comes to investing. And when you're investing, you need to take a look at the entire picture, not only investing, but what's happening in the geopolitical world as well. And Harold, one of the stories that came out this week is in Greece. They're really having a hard time undoing their capital controls because the stock market is not back going. People, the banks are still closed, and people are only able to withdraw a small amount of money per week. And they're trying to figure out a way without crashing the economy or having everyone take all their money and move it overseas, offshore, how they get everything back up and going again without crashing things. And this is where we advocate having hard assets, diamonds, gold, and silver in your possession. If you were in a Greece-type scenario or a Cyprus-type scenario, which we saw a few years ago where they did the bail-ins, this is the reason we advocate hard assets, Harold, because you need to have something in your physical possession, and we have about 2 minutes left here.
Well, you do need assets in your personal possession for sure. You do not want your most valuable assets being held by anybody. And then on top of that, the type of assets you're talking about are all priced in U.S. dollars, which is gold and which is diamonds. So those are two very important steps because, again, right now, you can see it. It's happening right in front of your very eyes. The American dollar keeps going up and up and up and up. So, again, at this particular point, it's very, very important to own assets as insurance. Gold is insurance against what's coming forward. There's no way in the world, with all the debt in the world, that gold's not going to go up. Gold's going to go to $4,000 to $5,000 or more. It's going to be one of the biggest bull markets of all time. But right now, due to what's happening financially around the world, gold is in a downturn. And it's going to continue to drop as long as the U.S. dollar is going up. And according to my calculations, if the U.S. dollar gets to 107, we could see gold actually break 1,000 and go to 900. The heaviest support for gold is at 850 because that was the high that it hit back in 1980. So it'd be very difficult for gold to break below that. But we'll continue to reanalyze the markets as it continues to hit the price points that we're looking at. I'm not concerned about it in any way, shape, or form because I own my gold outright and we don't leverage it. So if you're in the same situation as me, don't worry about it. Give us a call. We'll let you know what to expect. If you're leveraged or you're financed or you're in shape that bad shape that way, you really need to contact me because I can help you. So, again, that's the way I see things at this point. The world is in a mess. But when you really push away everything, there are certain pathways to success that are visible to us. And our clients are doing very, very well at this point. So if you're not doing as well as our clients, making 24% a year on your money, you better get in touch with me very quickly.
Our featured diamond of the week, a 1.56 carat cushion cut, fancy vivid, yellow, internally flawless. Speak with Harold at rarecoloreddiamonds.com or 1-800-432-1022 about investing in that museum quality diamond. Thank you very much, Harold Siegel. Have a great long weekend.
Well, thank you very much, Randy. I wish everybody a wonderful long weekend and a very profitable day.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.